on the whole, we should be worried that the longer term problems in the UK economy, which is we grow more slowly on a structural basis because of low productivity, those are things the government can do that can support it. And of course, lower inflation would help that. But remember, investment is a longer term proposition.
Yeah.
So I think this is the time to try and, help the economy grow. And that would actually do a lot, I think, to help
Sure.
people.
The latest figures released an hour ago show the economy shrank by 0.3% in the last quarter of 2023. That's 2 quarters in a row where the economy got smaller. That means we were in recession in the last 6 months of last year. Jack Barnett is economics correspondent at The Times. Jack, good morning.
Morning.
Good to see you. We've got Linda Yueh as well, a fellow in economics at St Edmund Hall at Oxford University. Linda, good morning.
Good morning.
Good to have you both with us. Right, Jack, first of all, let's just get a grip on some of the basics here, which hopefully are fairly basic. What GDP is, why it matters, and what the definition of recession is and what it means.
So GDP stands for Gross Domestic Product. It's basically a measure of all the value of all goods and services produced in an economy over a specific period of time. Obviously, what the ONS has released this morning was the period which they're measuring was the final 3 months of last year. Obviously matters for people because, depending on how much we generate of that per year and how that's sort of distributed across the population, that has big implications for people's living standards. Obviously, what the ONS has said this morning is that GDP actually contracted by 0.3% in the final 3 months of last year. So people were getting plainly worse off. Obviously, comes off the back of inflation being very high, interest rates going up quite sharply as well. So people in the country obviously feeling a little bit worse off. Now, economists there's a bit of debate within the economics community as to how we sort of define what a recession is, how long do we sort of look at the economy, how long has it performed for. The sort of rule of thumb definition is if an economy is contracted for 6 months in a row, so that's 2 quarters in a row, then the economy can be said to be in technical recession. Now, the ONS figures today, this morning, obviously showed that's what's happened. GDP down by 0.3%. That was worse than what the city was expecting. They were expecting GDP to have contracted by 0.1%. Bank of England was also expecting it to flatline as well. So I think across the board, these figures are pretty downbeat.
Okay.
Even if you look at the annual figure as well, we only grew by 0.1% last year. So they kind of cast a bit of doubt on the Prime Minister's pledge to grow the economy in 2023.
Indeed. Another crucial question, how reliable is the data? We often talk about forecasts being a bit awry. Can we depend on this morning?
So there will be revisions to the data. I mean, the ONS do quite frequently do that. Obviously, people will probably cast their mind back a few months ago when the ONS sort of revised a lot of their legacy data going back a few years or so when initially they thought the economy was still smaller than what it was before the COVID pandemic, and then the revisions actually led to a massive upgrade, and the economy was actually estimated to be about 1% larger than compared to the pre-pandemic times. So there will be a revision coming. Obviously, there's a potential for the recession to be revised away, and it's obviously right that the ONS does that as it gets more data in. Obviously, you get a clearer picture for the economy. But right now, the clearest estimate is that the economy was pretty sluggish going into 2024.
Okay, Linda, I want to ask you then how a government can respond to a recession. What are the tools at its disposal to try to lift us out of recession?
Well, certainly they can use fiscal policy so that we've got a budget coming up just in a few weeks' time in the first Wednesday of March. And in fact, because the economy was in a technical recession towards the end of last year, expectations are that it will put pressure on the chancellor to try and support the economy. He's pledged tax cuts for a while, and there are other measures to support people who are on low income. That combination, plus the other major tool that can help us with a recession, is lower interest rates. Now, if the economy is in recession, that means that inflation tends to be weaker. Now, of course, inflation at the moment is 4%, so we don't see that yet. But the city are expecting rate cuts coming in late spring and the summer. So the combination of lower borrowing costs, government doing a bit more, means that this year, despite the recession figures from the end of last year, for 2024, the Bank of England's actually upgraded its growth forecast to 0.25% from flat growth this year. And they're actually in line with, say, the International Monetary Fund that also expects growth this year of about 0.6%, again, on the basis that there will be supportive economic policies.
Okay. Can I put to you, Linda, the Chancellor's response, just for a bit of analysis on some of the things he says? So he says high inflation is the single biggest barrier to growth, which is why having it has been our top priority. While interest rates are high, so the Bank of England can bring inflation down, low growth is not a surprise. First of all, your analysis on that, reflections on that.
I think he is pointing out the fact that the reason we are in recession, and we're not alone. Continental Europe, if you look at Germany, the biggest economy, they've been pretty stagnant as well. High inflation means people have less money at the end of the day in their pockets, and that means they spend less, and businesses would be able to expand less. We also export less to others around the world who are all experiencing the global inflationary pressures. So, in the cost of living crisis, you wouldn't be surprised, regardless if it's a technical recession or not, that people just feel squeezed. And I think that's the premise for him saying you need to bring inflation, you need to halve inflation from the current 4% to 2%, which is consistent with a healthy, growing economy. Now, of course, that being said, we are doing worse than those major economies. So, there are some factors specific to the UK. We import more, for instance, food, and we import more manufactured goods. So we do tend to have more pass-through of inflation into our economy, and that's outside the control of the Bank of England or the government. And so I think it does mean him pointing out that inflation is the issue means that there are some things the government can do. But I think on the whole, we should be worried that the longer term problems in the UK economy, which is we grow more slowly on a structural basis because of low productivity, those are things the government can do that can support it. And of course, lower inflation would help that. But remember, investment is a longer term proposition.
Yeah.
So I think this is the time to try and help the economy grow, and that would actually do a lot, I think, to help people.
Growth, 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 as a former Prime Minister once tantalisingly shouted. Jack, just to get your thoughts then on inflation, because that's 4%, as Linda was just outlining. So is there a sense of victory there, or imminent victory for the government? It's proven to be a bit stuck at 4%, hasn't it?
Well, I think if you look at the forecast across the city and also from the Bank of England, is that people do expect inflation to sort of resume its downward trend. I mean, the Bank of England has got inflation coming back to target very briefly in the second quarter of this year. Some city economists saying that it could be down beneath 1% by the end of the year. And I think, all the main factors which have driven inflation up over the last 15 years are kind of going into reverse. So you've got energy prices probably falling in April time when Ofgem updates the price cap. There's also some base effects going on there as well. So I think inflation is definitely coming down this year. And I think the consensus across the city is that, we are going to get rate cuts from the Bank of England. It's just a matter of when, not if. I mean, the expectations now is for the first rate cut to be around about June time. We might get a few more after that. That's obviously going to deliver a bit of boost to the economy going forward. Tax cuts at the March budget, which are expected, will probably help as well. But Linda is also right, is that we do have these sort of long-term structural headwinds which have been looming over the economy for quite some time. I name the sort of investment has been very weak for quite some time. Productivity growth has also been very weak since the financial crisis, and that's kind of hemming in the economy. It means it can't grow to the same extent than it was in the previous decades without generating inflation. I think the long-term issue that policymakers need to get to grips with is kind of boosting the supply side of the economy, and that's probably going to need more investment to improve productivity as well.
Very quickly, Jack, can you glimpse a sort of feel-good moment in economic news?
I think, come May, June time, obviously the weather will be a lot better. There'll be a bit more daylight out there. I think the Bank of England will be cutting interest rates by that time.
Okay.
There'll definitely be a shift in mood around about the summer.
Linda, same question, just very quickly. Is that when things will start to feel better?
Hopefully, without another shock. Obviously, watching the Red Sea very closely. But I would say the optimistic view from today's data is we were in recession at the end of 2023, but in 2024. Most of the forecast, the consensus is we're out of recession already. This first quarter.
Yeah, of course. That's really helpful. Thank you both very much. What a helpful conversation. Linda Yueh, Fellow in Economics at St Edmund Hall at Oxford University, and Jack Barnett as well, Economics correspondent at The Times. You can read lots more analysis from Jack and the economics team as they get to grips with the data today and crucially, what it means for you.